The stock market is in red. Your portfolio is bleeding. Mutual funds are down. Now what are you gonna do? Stop your SIPs? Withdraw your money? Or should you do something entirely different? If you are confused, this video is for you. Hello and welcome to Bosswala. I am Tanisha, and if you are worried that your stock market crashed, don't worry. I'm gonna help you out. So let's start. Stock market crashes. What should an SIP investor do? If your stock market has crashed and you think that you're gonna lose all of your money, don't worry. We'll figure it out together. I'm gonna help you with that. So the market rise and fall. But do you know what stays constant? Panic. Yes, every time Nifty and Sensex fall down, the investors start to panic. But history has a different story to tell. Do you know what the long-term investors do when the stock market crashes? You must be thinking what they would be doing. They'd be panicking and everything. What do you think they do? They run away? No, they do not. They don't run away, they stay and they win. Now let's talk about the red portfolio fear. The bright green portfolio that you used to love has now turned red. It feels like a nightmare, right? So you invested 1 lakh rupees and now you only have 87,000 rupees. But here's the truth. This is not the time to stop investing. Actually, this is the time you should invest even more. You must be thinking, what am I saying? But don't worry. I'll also give you an example for you to understand better. So if you look at history, you'll see that every big market crash was followed by even bigger recovery. Here's a quick reality check for you. So let me tell you an example about the stock market crash and its impact. Starting with year 1986, the market crash event was financial crisis and the market drop was 41%. In 1991, market crash event was balance of payment crisis and the market drop was 39%. In 1992, Harshad Mehta scam, market drop of 54%. In 2000, dot-com bubble, market drop of 56%. In 2008, global financial crisis, market drop of 61%. In 2020, COVID-19 crash, market drop of 39%. So every time the market crashed, it bounced back even stronger. So if you would have invested consistently during these times, you would have made a fortune by now. Well, now I think I have raised a question for you. Stopping your SIP is a loss or a profit? Well, most of the investors stop their SIP in panic. But here's the golden rule. Long-term investors love market crashes. You must be wondering why. This is because when the market crashes, the units are cheaper. So the long-term investors buy more units at a cheaper price. And when the market recovers, the prices of those units skyrocket. Let me also give you an example here. Let's take an example of 20-year SIP calculation. Starting with taking one scenario where a person never stopped his SIP and his total investment was 36 lakh rupees in 20 years. Now, the final value after 20 years was 1.37 crore rupees. Whereas another investor stopped SIP for 1 month each year and his total investment was 33 lakh rupees after 20 years. But the final value after the same 20 years for him was 1.11 crore. So can you see the investment difference in both the scenarios are just about 3 lakh rupees, but the profit definitely has a huge difference. Like one only had 1.11 crore rupees, the other one who only invested 3 more lakh rupees had 1.37 crore rupees. So I think now you see the difference. So skipping SIP for only 1 month every year for 20 years costed 26 lakh rupees loss. Now you tell me, do you want to stop your SIP? Now let me help you with what exactly should you do. First, stay invested. Remember, short-term pain leads to long-term gains. Second, increase your SIP. If possible, invest more when the market falls, because as I have already told you that when the market crashes, the price of the units are cheaper, and when it recovers, the prices skyrocket. Third, Avoid panic selling. Do not sell your units when you're panicked and you see the market crashing. Give it some time, give it a thought, have patience, and then decide. Fourth, think long term. Always remember, wealth is always built with patience and discipline. Well, the market will fall, the market will rise, but the question here is, will you panic and exit, or you'll stay and build wealth? The choice is yours. Well, this is it for this video. I hope you liked it. If so, don't forget to like, share and subscribe, and also share it with your fellow investors. I will see you next time, but before you go, if you want to learn more about such information and insights, download Bosswala app now. Bosswala helps you learn practical strategies and framework directly from successful business owners through video courses or one-on-one video calls. Not just that, Bosswala also helps you with tools and resources to start, operate and grow your business. So download Bosswala app now.
Bosswala. Be the boss.